When the richest people start hoarding the poorest performing asset, the system is breaking. On November 15, 2023, J.P. Morgan's Private Wealth Management Division quietly issued internal guidance recommending that ultra-high net worth clients maintain 15–20% of liquid assets in physical cash holdings, actual paper currency stored in secure facilities rather than digital bank deposits. This represented a dramatic departure from previous allocation recommendations that typically suggested minimal cash positions due to inflation erosion and opportunity costs of non-yielding assets. The guidance wasn't issued to retail clients or typical investment accounts. It was specifically directed toward clients with assets exceeding $100 million who traditionally maintained sophisticated investment portfolios optimized for maximum returns across multiple asset classes. These individuals had spent decades avoiding cash holdings that guaranteed purchasing power erosion in favor of investments that historically provided inflation protection and wealth accumulation. But J.P. Morgan's recommendation reflected broader pattern recognition among wealth management institutions serving billionaire clients who were systematically increasing physical cash positions despite mathematical certainty that cash holdings would lose value to inflation. When the most sophisticated investors in history begin accumulating assets guaranteed to lose purchasing power, their behavior indicates institutional recognition of systematic problems that make traditional investment mathematics irrelevant. The billionaire cash hoarding phenomenon represents mathematical contradiction that becomes logical only when analyzed through risk scenarios, where digital payment systems, banking infrastructure, and electronic financial networks face breakdown probabilities that exceed investment return calculations. Elite investors choose guaranteed losses through cash accumulation because they calculate higher probability losses through digital system failures. Understanding billionaire cash behavior requires recognizing historical patterns where wealthy individuals systematically reallocate assets before major monetary system breakdowns become obvious to conventional analysis. Elite information networks and analytical capabilities enable crisis recognition months or years before public indicators reveal developing problems, allowing protective asset allocation before system failures make such allocation impossible. The Rothschild banking family demonstrated this pattern during the 1931 sterling crisis by systematically converting British pound holdings to physical gold and Swiss franc currency months before Britain's forced departure from the gold standard became inevitable. The family's cash and precious metal accumulation appeared economically irrational until currency devaluation vindicated their allocation strategy. Similar patterns appeared among wealthy American families during the 1970s. Monetary breakdown when David Rockefeller, the Hunt family, and other elite investors began substantial gold and foreign currency accumulation between 1971 and 1973, well before inflation became an obvious problem requiring precious metal protection. Elite cash and hard asset hoarding preceded general recognition of monetary system instability by sufficient time margins to enable effective wealth preservation. Current billionaire physical cash accumulation follows identical mathematical logic, despite different technological and monetary contexts. Elite investors recognize systematic vulnerabilities in digital payment infrastructure that create breakdown probabilities exceeding conventional investment risk calculations. Physical cash provides insurance against digital system failures that could make electronic wealth inaccessible during crisis periods. The mathematical foundation of digital payment systems creates systematic vulnerabilities that physical cash holdings protect against through geographical distribution and technological independence. Electronic payment processing depends on continuous electrical power, internet connectivity, and banking system functionality that can be disrupted through natural disasters, cyber attacks, or infrastructure failures. Modern economies operate according to digital payment dependencies that exceed anything in human history. Over 97% of monetary transactions occur electronically through credit cards, bank transfers, digital wallets, and online payment systems that require complex technological infrastructure for basic functionality. When digital systems experience widespread outages, economic activity stops immediately because physical currency represents less than 3% of total money supply. Billionaire cash hoarding recognizes mathematical reality that digital payment concentration creates single points of failure for entire economic systems. Unlike diversified investment portfolios that spread risk across multiple assets and markets, digital payment systems concentrate systematic risk through technological dependencies that affect all electronic transactions simultaneously. The 2008 financial crisis provided preview of digital system vulnerability when electronic payment networks experienced stress that required Federal Reserve intervention to maintain basic transaction capability. Banking system digital infrastructure approached breakdown thresholds that would have made electronic payments impossible, forcing economic activity to halt across all sectors dependent on digital transactions. But 2008 digital payment stress occurred during a period when physical currency still represented approximately 8% of total money supply, providing emergency transaction capability that prevented complete economic shutdown. Current physical currency levels have declined to approximately 2% of money supply, while digital payment dependencies have increased exponentially, creating systematic vulnerability exceeding previous crisis episodes. Cyber warfare represents an emerging threat vector that specifically targets digital payment infrastructure through coordinated attacks designed to disable electronic transaction capability. Nation-state cyber capabilities now include systematic disruption of banking networks, payment processing systems, and digital communication infrastructure that electronic payments require for functionality. The mathematical progression of cyber threat development suggests systematic attack capability approaching levels that could disable digital payment systems across entire regions or countries. When cyber attacks affect digital payment infrastructure, physical cash becomes the only transaction mechanism capable of maintaining basic economic activity during system restoration periods. Billionaire cash accumulation recognizes cyber threat mathematics through allocation strategies that provide transaction capability independent of digital infrastructure vulnerability. Physical cash holdings enable continued economic activity during cyber attacks that disable electronic payment systems, providing systematic advantage during periods when digital wealth becomes temporarily or permanently inaccessible. International examples demonstrate digital payment system fragility during infrastructure disruption events. Lebanon's 2019 banking crisis made electronic transactions impossible, while physical cash enabled continued commerce. Venezuela's infrastructure breakdown eliminated reliable electronic payments, while cash transactions maintained basic economic activity. India's 2016 demonetization experiment created cash shortages that paralyzed digital-dependent economic sectors. These international examples reveal mathematical relationships between digital payment dependence and economic system fragility that billionaire allocation strategies recognize through increased physical cash positions. Elite investors understand that digital payment reliability depends on infrastructure stability that cannot be guaranteed during systematic stress periods. Energy infrastructure represents critical vulnerability for digital payment systems because electronic transactions require continuous electrical power for payment processing, network communication, and banking system operation. Regional power outages immediately disable electronic payment capability, while physical cash transactions continue functioning independently of electrical infrastructure. Climate change effects on electrical grid reliability create systematic vulnerabilities that affect digital payment system functionality through increased frequency and severity of power disruptions. When electrical infrastructure faces stress from extreme weather events, digital payment systems become unreliable while physical cash provides transaction capability that operates independently of power grid functionality. The mathematical calculation underlying billionaire cash accumulation includes probability assessment of infrastructure breakdown scenarios, where digital systems become temporarily or permanently non-functional. Elite risk analysis incorporates systematic threats that conventional investment planning typically ignores because such threats appear unlikely during normal operating periods. Social unrest represents additional threat vector affecting digital payment system reliability through targeted attacks on banking infrastructure, payment processing facilities, and communication networks. During social breakdown periods, digital systems become primary targets for disruption, while physical cash enables transaction capability that operates independently of institutional infrastructure. Historical analysis demonstrates that social unrest episodes consistently target banking and payment infrastructure as systematic pressure points for affecting economic activity. Revolutionary movements traditionally seize banks and payment systems as control mechanisms, making digital payment dependence a systematic vulnerability during periods of social instability. Current social tension indicators suggest increasing probability of unrest episodes that could target digital payment infrastructure through coordinated attacks designed to disrupt economic activity. Billionaire cash allocation recognizes social breakdown mathematics through positioning strategies that provide transaction independence during institutional system targeting. Government capital controls represent a systematic threat to digital wealth accessibility because electronic assets can be frozen, confiscated, or restricted through administrative actions that cannot affect physical cash holdings. Digital payment systems create governmental control mechanisms that enable immediate wealth seizure during policy changes or emergency declarations. Historical capital control episodes demonstrate governmental tendency to freeze electronic assets while struggling to control physical cash circulation. Cyprus 2013, Greece 2015, and Argentina 2001 capital controls targeted digital banking systems while physical cash continued circulating despite governmental restriction attempts. Elite cash positioning provides protection against governmental wealth seizure through digital system control. The mathematical advantage of physical cash during capital control episodes reflects governmental inability to monitor or restrict cash transactions with same efficiency as electronic payment surveillance. Digital payments create transaction records that enable comprehensive governmental oversight while cash transactions operate outside systematic monitoring capability. Privacy considerations motivate billionaire cash accumulation through recognition that digital payment systems create comprehensive transaction surveillance that eliminates financial privacy for sophisticated investors. Electronic payments generate permanent records that governmental and institutional monitoring systems can access for taxation, litigation, or political pressure purposes. Cash transactions provide privacy protection that digital payments cannot offer because physical currency exchanges operate outside systematic recording mechanisms. Elite investors recognize privacy mathematics through allocation strategies that maintain transaction capability independent of surveillance infrastructure that affects all digital payment activity. Monetary policy uncertainty creates additional motivation for billionaire cash positioning because physical currency provides hedge against digital currency implementation that could eliminate traditional monetary instruments. Central bank digital currency development represents systematic threat to current monetary arrangements that cash holdings protect against through technological independence. CBDC implementation could eliminate physical cash circulation while creating governmental control mechanisms over all electronic transactions. Billionaire cash accumulation represents preparation for monetary system transitions that could make current digital banking arrangements obsolete while providing transaction alternatives that operate independently of new monetary control systems. International monetary system instability motivates elite cash diversification across multiple currencies that provide protection against single currency breakdown scenarios. Billionaire cash holdings typically include dollar, euro, Swiss franc, and other major currency positions that spread systematic risk across different monetary authorities and economic systems. Currency diversification mathematics recognize systematic vulnerabilities in single currency dependence while providing transaction capabilities that operate independently of specific monetary authority decisions. When individual currencies face breakdown pressures, diversified cash holdings enable continued transaction capability through alternative currency use. The timeline implications of billionaire cash accumulation suggest systematic breakdown preparation for scenarios expected within predictable time horizons rather than indefinite future possibilities. Elite allocation timing typically precedes crisis events by sufficient margins to enable protective positioning before system stress makes allocation changes difficult or impossible. Current cash accumulation patterns suggest systematic breakdown timeline expectations operating on 2 to 5-year horizons based on allocation urgency and positioning magnitude across multiple elite investors simultaneously. When billionaire behavior indicates systematic preparation timing, historical analysis suggests crisis probability increases substantially within predicted timeframes. Wealth preservation mathematics underlying billionaire cash positions reflect calculations that systematic breakdown risks exceed investment return opportunities during periods when infrastructure vulnerabilities approach critical thresholds. Elite investors choose guaranteed inflation losses through cash holdings because alternative investments face higher probability losses through systematic breakdown scenarios. The mathematical logic becomes obvious when systematic breakdown probabilities exceed investment return expectations by margins that make traditional portfolio optimization irrelevant. Physical cash provides wealth preservation during crisis periods, even when purchasing power erosion reduces nominal values through inflation effects. Storage and security considerations create additional complexity for billionaire cash accumulation because large currency holdings require sophisticated storage infrastructure that provides physical security while maintaining accessibility during emergency periods. Elite cash positioning includes geographical distribution strategies that spread physical storage risk across multiple jurisdictions and facility types. Professional wealth storage services have developed specialized cash holding capabilities that provide institutional-grade security for physical currency positions. These services operate outside traditional banking infrastructure while providing storage, insurance, and access capabilities that enable large-scale cash accumulation by sophisticated investors. The emergence of professional cash storage infrastructure reflects systematic recognition among wealth management industries that sophisticated clients require physical currency capabilities that traditional banking relationships cannot provide. Storage service development indicates institutional preparation for client demands that exceed conventional digital banking service capabilities. Insurance and risk management for physical cash holdings create additional considerations because currency storage requires specialized coverage that protects against theft, natural disasters, and governmental seizure risks. Elite cash positioning includes comprehensive insurance strategies that provide protection for physical asset holdings across multiple risk scenarios. Current market conditions suggest billionaire cash accumulation will accelerate as systematic breakdown indicators increase, while conventional investment opportunities deteriorate through monetary policy manipulation and asset price inflation. Elite cash positioning provides flexibility during periods when traditional investments face systematic risks exceeding acceptable thresholds. Understanding billionaire cash hoarding as systematic breakdown preparation rather than investment diversification provides insight into elite assessment of current economic conditions and timeline expectations for infrastructure vulnerability expression. When the most sophisticated investors in history choose guaranteed losses through cash accumulation, their behavior indicates systematic breakdown preparation that conventional analysis should recognize as early warning indicator. The mathematical contradiction of wealthy individuals hoarding poor-performing assets becomes logical when systematic breakdown probabilities exceed investment mathematics. Physical cash provides transaction capability, privacy protection, governmental control resistance, and crisis-period wealth preservation that digital investments cannot offer during infrastructure breakdown scenarios. When billionaires started hoarding physical cash, they revealed institutional recognition that digital payment systems face systematic vulnerabilities that make electronic wealth inaccessible during crisis periods that elite analysis suggests are approaching within predictable time frames. The hoarding represents mathematical response to systematic breakdown preparation rather than portfolio diversification or investment strategy adjustment.